welcome on board Shreyas Diwalkar as well, Head of Equity Access Mutual Fund, joining in on the show right now. Shreyas, hi, morning. Lot of news flow, and let's first talk about the tariffs and 100% at that on patented and branded drugs. Shreyas, what does it do to the prospects of pharma? While, of course, the Indian manufacturers are largely into generics, but what about names like Biocon, Sun Pharma, etc.? I know you can't talk about individual companies, but just a broad perspective on how they stand to get impacted.
True. Actually, as you're rightly highlighting, not many companies, actually very few, would be sending any drugs which are actually branded from here. And as a percentage of their revenue, also it's very less. In terms of further complications into this, if you look at even auto sector, it should treat it more like auto ancillary. So there are multiple intermediaries or APIs which are also getting sold from India to US. How it will be treated? So that kind of clarity one need to think. But looking at the pattern in which it happened in case of auto ancillary, I don't think much risk as of now in that one. We need to wait for the clarity. So overall, it looks like mostly a neutral sort of event for bulk of the portfolio in the pharma space.
All right, that's the take coming in on the pharma space. Hi Shreyas, morning. This is Shrishti also joining in. But the other sector that is in focus is actually the IT space. Lots been happening there with respect to H1B visa, a fee hike. Along with that, it's the Accenture earnings. Believe that you are underweight on the IT space right now, but some experts do believe that now that the valuation correction has been done, maybe in some time from now, the IT space is something that they can be looking forward to. What's your current view on the IT space, and how do you see the earnings going ahead?
IT being a very old sector and very global sector, looking at its standalone valuation just in India, what happened is not a right metric to look at it. One need to look at what is happening to the IT companies' valuation globally as well. You will observe that it is not only in India. So what we tend to normally look at is India's IT companies' valuation premium or discount compared to Indian Nifty and try to conclude anything around it. As long as there is a buoyancy in the market, such kind of analysis may work. But broadly, what I tend to do is, what is the multiple of Indian IT compared to the global IT? So it can be Accenture of the world, it can be Globant, it can be anything. So there are multiple global entities which are getting traded. Now, if you look at in that context, then the global IT peer set has also got derated a lot during this time. Some of the companies which actually you should trade at around 40p or 35-40p, some of them with the growth slowdown has got derated to as low as 12 to 15p. So that trend is observed everywhere. So it is not only India specific, and there is no reason to compare it with the Indian multiples as such when it particularly comes to IT. As far as growth is concerned, definitely growth has come down over last year or so. It is not last 1 year, actually it is almost now 2 years it has come down. H1B and its impact, I think already it is being much be discussed everywhere that impact per se is not as much the way we are interpreting the rules as of now. But it is more to do with the slowdown across end user sectors. So it can be pharmaceutical, it can be auto or BFSI. Their cut down in their spend and their uncertainty because of which they are not taking decisions. So what is happening around here is the new deals are not coming. The same deals which are getting renewed, they are getting broken down and different players are winning. So in such a scenario, it creates a pricing pressure and it also creates a lower growth for a sector as such. So in that context, one should not look at only from the valuation point of view in the Indian context. We have to compare it with the global valuations and position accordingly.
Okay, so that's your take on IT. Shreyas, hi. Want to understand your view on defense, because that is something you're positive on, and based on your fact sheet, you've also increased some exposure to defense. Now, while we are seeing some of the defense names do well once again, do you believe that this uptick that we're seeing is here to stay, or do you believe that valuations, especially on the shipbuilding side, are quite excessive right now?
So valuations definitely see when it comes to the relative growth in the market, the pockets of relative growth always in India has got a scarcity premium. So if you want to look at from that point of view, yes, then yes, some of these sectors. So it is not only about defense. There are multiple sectors like electronic manufacturing services, like even hospitals and hotels, etc., where there is a tailwind in terms of earning growth near term. There is a scarcity premium getting built in the valuations of these sectors because some other sectors like banking and FMCG and IT, they are not growing. So coming back to defense per se, and as I said, the valuation angle has a multiple subcomponents into it. But when it comes to growth globally, actually, you must be noticing that that trend is on everywhere, that the spend is increasing. The countries are allocating more budget. And in my opinion, that trend may continue. So from that point of view, even India also has focused a lot. Actually, some of these companies have demonstrated their capability. Not only in India, even world is recognizing the capability of some of these companies. So accordingly, one need to look at this sector in the context of both overall market growth as well as the sector tailwinds what it has.
Shreyas, what are you making of the overall market though? Because, what we're seeing is that all the action has moved from the secondary market to the primary market. I mean, look at the kind of subscription figures that you're seeing to some of these IPOs, and so many IPOs in just the last 2 months alone. So
it's good that these IPOs are coming in different industry, and that's what actually has happened over last 7, 8, 10 years. It's not just now. So actually it started with the insurance sector. The large companies coming out with totally different sector altogether. After that, it came in the electronic manufacturing, defense. It came in chemical industry. Now they are coming in multiple in the listed space. And that is a definitely positive development, what we are seeing as far as the overall capital market is concerned. Because earlier it used to get too concentrated in few sectors like financial services and in the good days of IT, only IT related companies. Now they are diversified right from, if you look at the pipeline of the IPOs, they are right from consumer to B2B and defense, everywhere they are spread. And that is really good news here. It offers a good opportunity. So when we look at the market cap to GDP ratio, the more and more is a representation of GDP in the market cap of country, the more it is getting captured, the better for the investors and their diversification. If your question is more from the point of view of flows and how one should look at it, yes, with the correction in the market since September 24 and the earning cuts, there is definitely the valuations are also has got corrected across the board. And especially if you look at mid and small cap, there are multiple mid and small cap which are actually down from last year peak by almost 20, 30, 40% as well. With this development, even the valuations in the primary market as well has, if you notice that they are also coming at a reasonable valuation in some cases. So these developments are really good. So both from the perspective of valuations and both from the perspective of opportunity to participate in the wider segment of the economy. That's how I would look at it.
That it is. What I meant was that, one of the key reasons for why the market or at an index level, it seems like it's not really moved much, while there is, of course, the DI liquidity which is coming in and buying the market every day. The FPI money is actually finding its way to IPOs and as well as blocks too, which have been happening pretty much on a daily basis. But that said, Shreyas, what about the entire consumption piece? The GST rationalization, do you think it's in the price, or are the markets still to take cognizance of, the numbers that will actually pick up on the demand end?
Sure. Here, if you do a calculation of how it should pan out, generally whatever newspaper reports which are coming out so far, what they suggest that festive season demand growth is somewhere around 15-20%. So on a day-to-day basis, the numbers may look very high, but festive season demand growth is about 15-20%. It's too early to conclude anything on this because entire Diwali festive season is yet to pan over a month or so. But hypothetically, if that is the case, then generally festive demand is 30% of overall year's demand. Then this should lead to upgrade of closer to 5%. This is a rough estimate. It's not true for all the sectors, but let's take this work with this assumption for a consumption sector as such. So when you look at the stock prices point of view, yes, they have moved up a lot. So this part of it, actually bulk part of it, is factored in. What we need to focus on to create sustained value creation in all this sector is whether it is going to continue post-festive season and how it is going to continue post-festive season. As far as we are concerned, what we are trying to look at it is who are the relative beneficiaries of these changes in the GST, and one should look at them more so, and then obviously also track on whether how this demand is sustained. Now, as far as sustenance of demand is concerned, there are 2-3 elements. So now that is not only due to that is not going to be only due to GST. So it was a tax rate cut, almost 1 lakh crore. This GST cut, government estimates are almost 50,000 crore. It can be close to 1 lakh crore or so if demand actually increases. Plus, there is a cut in the interest rate, and because of this, there is a improved liquidity as well. So cumulative impact of all these three, ideally, should lead to sustained demand growth. That actually we need to watch out for post-festive season to conclude a sustainable rally in these sectors.
Right. Okay, Shreyas, great to have you on the show. Thank you so much for your time today.
Thank you very much.